We see this news coming out this morning. U.S. unit labor costs higher in the second quarter than initially thought. What does that mean? Let's translate that. Unit labor costs. Costs are inflationary. All right, so right off the bat, that's an inflationary headline. That's inflationary economic news. So that is a very important point here. The reason why that's important, folks, is because, again, the only way the Fed can stop raising and start lowering interest rates, which is what the market craves, is if we see inflation continuing to come down. Lately, we've seen oil go up, and oil again, nearing $90 a barrel. We've seen gasoline. We've seen other costs going up, and that is putting a major cramp in the Federal Reserve's ability to cut these type of things. All right, another thing, check this out. Employment claims. All right, employment claims coming down. And this is a wild one, folks, because even I'm surprised at this. Now, whether this is because of August and it's just a dead month and people are like, hey, I'm going to hang out with the kids until we get into September. Because remember, this is from last week. So again, this is mostly that kind of holiday week going into Labor Day. So it's possible people just said, you know what, I have to file for unemployment, but I'll wait till after the holiday. I'm not going to worry about it now. That is a possibility. But check this out, guys. All right, we saw the number come in for people filing for unemployment at 216,000. The expectation was for 230,000. Okay, so again, a much lower number of people filing for unemployment. That generally speaks to a stronger economy. All right, now again, like I said, maybe it had something to do with the holiday. We'll know next Thursday when those next numbers come out. But again, it was the lowest number since February. And that's something important to keep an eye on because here we're looking for weaker economic news. The market wants weak data. It wants bad data. Bad data right now puts the Fed on the sidelines. It means hiking is over. We're not seeing that. So the November rate hike, which again, the markets are kind of 50-50 on, now after the data today and the unit labor costs, could be starting to spike just a little bit in terms of expectations.